Okay, hi everyone. Welcome back to the second part of day two. Great to have everybody here again. Yes, we are building it into Sierra charts as well, Keith. I just saw your comment, and that's coming as well. That'll be about 3 weeks. So now we're going to do trading today's markets with insights from Wyckoff, Weis, and Williams with Steve Phillips. And Steve's going to be taking us through again some trade setups. So would you please give a warm welcome for Steve Phillips, everyone? Thank you.
Thanks for that, Gavin. Well, today I'm going to be talking about, yesterday we talked about the what causes the market to turn and things to look for. Now, once you have all that in place, basically I'm going to show you things to look for after those accumulation distribution have taken place and how to effectively get into the market. And also I'm going to show you a few techniques that will help you catch it kind of early, and you'll utilize multiple time frames to start locking it in, and then you can peel it back. So this is the concept of what we're going to be going through today, is how to get into a trade and ride it for as long as you possibly can after you've seen the cause, and then we'll trade the effect. The cause would be accumulation or distribution. I'm going to show you some trend trade setups, which are we'll have to see specific things in the background to make that happen. There will be specific entries and filters and some stops, utilizing the trade guider system. We'll be utilizing, again, trailing stops, using multiple time frames to protect the profit and move it along with an open target. What inspired me was the anybody heard of the turtle traders? The turtle traders. That's what inspired me to set up this specific type of system, and utilizing Trade Guider's trending system. I just messed with the settings over the years and came up with something that was comparable with it's the same idea, but the filters and the way to get in the market, and using your volume spread analysis skills to actually get in the right side, or not just take every little turn. So that's where the concept came from, and then I applied BSA principle to it to filter out the bad things for it. And I'm not saying it's a turtle trade, but it's the same. Yeah, exactly. It's a investment type or swing trades that'll last hopefully a month or years, but or weeks. If they last days, well, you know what happened. It's basically a way to add to the winners as well. The setup criteria, it's just a trend crossover. You have to see specific things in the background, though. Time frames, we'll be using a weekly, a daily. Once the trend is in place, this is important. Once the trend's in place, the 240 chart can be used to protect the profit along the way. It's a 4-hour chart. Really start locking things in. And the moving averages are on the diamond system. It's a proprietary system where it changes white, green, and red. But I found that once they turn color, it's a pretty true direction, and it kind of filters out the noise of the chop back and forth. I have some H-stop settings, and those are those volatility stops that you see in the Trade Guider system. We'll be going over some charts, and I'll talk about those H-stops, or volatility stops. They flip, or the trend changes with the diamonds, and specifically, you'd like to see either a pivot high or low, or the accumulation phase, distribution phase take place and have it jump the creek or fall through the ice. And then it's almost a no-brainer just to jump in there. The what I specified here was the no more than 45 bars in the background. I'm going to show you something. I mentioned 90 bars, pivot high or low. Well, if you saw that on the right edge of the chart, that would be a setup I would take. Those gap down shakeouts, the up thrust, 90 bar high. I'll take them if it's working. I can utilize this trending system trade to add to that position. And then if I'm on the weekly, we'll get into that, into how I'll lock those things in. It works on all trending markets. I got to really stress trending markets. There are markets that will go back and forth, and it's a good way to get chopped around. But the currency markets, gold, corn, wheat, soybean, and a lot of stocks. There are stocks that have that characteristic. They'll go back and forth, up and down for years. And there's those stocks that weave in and out that are, it's usually the larger cap stocks where you have a lot of institutional funds coming in and out. That really shows the accumulation distribution. And once they can get a hold of that, they tend to trend more. So something to think about, the little bigger stocks within the index. The best stock, I call it the crawler trade. That's why I have it in there. Crawler meaning it's going to take a long time. It's just going to crawl along, and after about a year, things should be working out well. But the best candidates are ones that are acting stronger or weaker than the index. Are you all familiar with the scanning on the trade guider system, where you can pull up a Dow and then pull up all the Dow stocks, and it'll scan through them and measure the intensity of which one's going up faster than the Dow, which one's going down faster than the Dow. Is everybody familiar with that on the internet? The scanner for stocks acting stronger or weaker than the index. Okay. Excellent. Pull that out.
Just quickly show you.
Ah, there it is.
Okay, so if we were to do a scan, basically I'll start a fresh one, build my own scan list. Okay, you can talk them through this
Sure.
on the internet. So what we're looking at here, hopefully you can hear me on the internet.
Yep, okay.
We're basically looking for, this is based on Wyckoff. This is all Wyckoff, and it was developed by Tom. I'm using Reuters data feed here, and I'm going to load my parent index. Now I can load any index. It could be Malaysian, Indian, Australian, doesn't matter where it is, London. I'll load the S&P for now because I've been trading some stocks in here. And then we're going to click on next. We've got the data that I downloaded, so that's current. Okay, we click on next, and we're going to add a watch list, which is of course the S&P. It's going to load all the stocks. I'll just do. Now you can set this parameters. I usually leave it as standard. I don't know about you. You can play with this. There's ways of doing it.
I make adjustments if it makes sense on the chart, but I'll leave it at the standard if it doesn't.
Yeah.
If everything's good.
And then the reference points, you can use more than two. Two is a great place to start, though, to see, it says, it's now time to choose a number of reference points. The minimum value is 2, representing 2 pairs of up and down moves in the index. This is a good place to start until you become more experienced, and that is a great place to start. In fact, I don't ever change that. So we'll call this Steve Scan. Okay, so you rename these because it's the software actually saves it for you, so you can go back and look at what happened. Okay, it's pretty quick. Now what it's doing, as you can see in the background here, it's looking at the parent index, which is on the top there with the red signals. And it's now looking for, so you see some stocks, you see
weak, strong. Yeah.
Yep, it's looking at weak and strong stocks. Some are lower, some are higher. What we're looking for in a pullback in an uptrend, we're looking for stocks that don't pull back as fast. That's the key to it. That's what we're going to look for. Let me just take this call from Gary. Hey, Gary.
I've got a napkin drawing on that as well, later in the slide.
Gary, I'll call you back. I can't hear you. That's terrible. So this will take about another probably 25, 30
it's quick.
seconds. That's super quick. And now I do this every week. I do my scans on usually on a Sunday, sometimes Monday morning, so I've got the latest data. I scan the Dow, I scan the S&P, I scan the FTSE and the ASX stocks to see which ones I'm going to talk about that week. And I trade mainly the US markets now because that's where I am. One of the best ones I've been finding to trade has been Amazon, has picked out this. It's been a good one for me. Apple has been great, of course, which everyone's been trading. But actually, there's been some surprises. Nextel and Sprint have come up a few times, which are mobile phone or cell phone providers. And you've also got my favourite airline, Southwest, came up. In fact, you can see this is a scan I did earlier. In fact, it's there. Some of these I don't even know. But look at the weak stocks. You see, you've got, First Solar, I think. Was that the company that Obama invested in? I'm not sure. It was one of them was that's solar panels, I think. Abercrombie and Fitch. Oh, there you go. So we've got the, so basically, if we take Southwest Airlines, for instance, now that you can see here, you can now look at the indicators and you can see if the stock is rallying away with the index. We won't explain all of these, but because I'm sure Steve will talk about it. But basically, these are the ones that are acting weaker at the moment. These are the ones that are acting stronger, as you can see, than the parent index that we're in.
That's a nice one.
That's a good one right there. In fact, you can probably talk about that one. You can see there. So, Steve, I'll hand it back over to you, and then that's what the stock scanner does. By the way, I just want you to say, if you want to see this and you want a demo of that in your own time, just let me know, and I can get either Darren or one of the people in the office to do that for you. No problem.
Excellent. Yeah, I did mine on a napkin drawing, so this is much better. So what's happening here is it's measuring the intensity of the move here, and what did the index do? It didn't go with it. This is actually, when this moved down, it didn't move down very quickly. So it actually took out this wave up in here. You see, it's a higher high here. In here, there's the high here, and I haven't even taken it out yet. It's pretty straightforward. What I look for is the separation there. If they don't make sense, I'll just go on to the next one. That's the nice thing with stocks. There's so many of them. You don't have to just stare at one and wish and hope it's there and try to make up a setup. You just go through a whole bunch and. Yes. Yeah. The question was, is the study standard? Yeah. It's right here on the scanner, and you go to the stock scanner there, and follow the process that Gavin just did. But yeah, look at these, and anything that's acting stronger than the index, and the index is moving up, I start looking for those trend setups to the upside. And vice versa. If it's trending down and the stocks one stock's acting weaker, then I'll put that on my radar. Then I'll look for those specific things to happen. And let's get into those specific things here. So the best stocks are candidates that are acting either stronger or weaker than the index when you're going with the index. Here's a setup here. Slow down a little. There it goes. A little delay. Okay. Okay, I'll make sure I slow down when I click on screens and I won't go. Okay. This is I utilize the H stop specifically for this setup, and Can everybody on the internet see the gold chart here? You should see a bunch of green diamonds and the volatility stops. I'm pretty sure it's based off the Wilder volatility, but Gavin could probably elaborate more on that. It looks like a volatility stop. The weekly chart settings, the 3.25 settings for the H stops. Let me pull up Trade Guider for you. And see this diamond stops, or go, you hit that. And there it goes. I clicked it too quick. Sure.
Oh yeah, okay, they're good. There's a delay on the other one.
Okay.
Okay, good.
It's okay. It's your top. Good stuff. So volatility stops. Here we go. Click on the H stops here, and then go to this arrow. They're normally set at 2 and 1.5, which is excellent settings. What I've done is I've gone a little longer term. Went from 3 to 2.5. See, it changes them. Gives you a little more room in there. And then what I've done with the diamonds, they're set at 20. I go 65. This is just this particular setup. I am dynamic with the H stops and the diamonds, and utilize intraday trending in different settings. But this is more of a swing trade type of holding. And specifically, if you see accumulation distribution in the background, I want to stress that. You take every little turn, it's a good way to get chopped up. And there you go. What do we have here? We have a red diamond. The thermometer's negative. The H stops have flipped. We have some distribution here in the background. You just slice through a pretty key level back in here. Here specifically, now it's holding. So what I would do is I see this, I go short. I put my stop up here and ride it on down. If I see some signs of strength come in, what I'll do is I'll take it from a, is this end of day data? Yeah. What I'll do is I'll go down to a 240-minute chart as soon as I start getting profit and lock it in and trail it as much as I can. And if I start to see when the daily catches back up, I leave the daily on and let it ride as long as I possibly can. So if I'm trading off the daily chart, as soon as it starts moving in my favor, I go to the 240-minute chart with the same exact settings. I utilize those H stops because they're going to be tighter on a smaller time frame. So that's how I peel out of it. I'm going to show you some examples here on the chart, though. The 3, the 2.5 with the 65 setting. You see here back in gold. What do you see here? You have a little consolidation, and another pop out. And right now it's, well, as of January 2000, it was sideways to neutral. And it's green. You going sideways there. And as soon as it breaks some key levels there, it'll be off to the races to the downside. But right now we're kind of back and forth on gold. But this is long-term stuff. Keep you in, keep you in, keep you in. It's just got to wait for them to flip and wait for specific things to happen in the background. And with gold, you know, it's was on a massive uptrend for quite some time. Okay. Well, that's okay.
Can I make a suggestion? That's a really big in-depth subject as well.
Yeah.
I'll email you, get it started with a guide, original trade guide I want. Do you want to just explain to the audience what was asked then?
Yeah,
I'll email you something which will help you.
the question was, am I taking just the crossover, the diamonds, and the H-stop system, and am I blindly just doing that without any regard to any signals in the background? I think was the question. Well, I filter specific things to happen. Specific things need to happen. Let's back up now on the presentation here. Specific things need to happen. There's a criteria. An accumulation or distribution needs to be in the background, or a shakeout or an upthrust needs to be no more than 45 bars back. The reason I put creating a 90 bar pivot high is you're getting in at 90 bars. If you can get in on that one, then you're going to be adding to that position. Does that make sense? 90 bar high, and then 45 bars later, if it's going to start trending down, I'm a happy camper. And basically, I talked about those 90 bar high up thrusts and the gap down shakeouts. Well, it's catching tops and bottoms. It's good stuff. That way you can peck away at it, and then once you catch the turn, you can ride it real well. And what I've found is when the indexes start turning over, some stocks take a while to turn. And when the index is going down, all of a sudden you start to see upthrusts on ones that were acting stronger, but they're starting to turn now too. And so really phase it with the market as well. So if the market's trending up, well, you're going to be looking for things that are moving up and gap down shakeouts to start your position. And after the trend has changed, you can start looking for pullbacks, tests, no demands, and upthrust as well. So what this does is it catches you. Here's your upthrust. You're catching the top. You're taking the crossover, and then when it crosses over, it's probably coming back to an area of resistance somewhere, which is going to give you your no demands, upthrust, and things of that nature. So you can actually add with your trend cause and effect type of trading as well. So there's 3 different ways to enter once it's called a pilot position, or probing the market is what I call it. Specifically, when indexes are going down and you start to see that stuff happen, it looks like stocks are trending up, but you're hitting the top because the market's starting to push back. Does that make sense? And vice versa. If the market Yeah, exactly. The indexes are going down, and you can actually pick out a upthrust and things of that nature. Now, that's just one. Now, when I talked about stocks acting stronger or weaker than the index, well, you can start finding those crossovers and just blindly take those. Well, not blindly. Make sure there's something in the background, but. And then when it starts to go back up on low volume or up thrust, you all know how to start utilizing that as well. So it puts the whole picture together, and you can add to your winners. And of course, if it's not working right away, well, just cut it loose and just wait. So there's definitely has to be some BSA principle in the background, or because if you take every trade, you're going to get chopped around. And that's what happened to the turtle traders. The market stopped trending, and they kept doing the same thing over and over and over, expecting different results. Yeah. No, they just buy high and hope it goes higher. They buy a low, hope it goes lower. Yeah, the comment was about when you're in a position, and if you start with a heavy position. Well, actually, what I'm getting is they were starting with a light position, and it would actually get heavier. You know, we get top heavy, so their average would be up as opposed to down. You know, pyramiding in general is not the greatest idea, but if you're going to add to your position, you want to start with a pretty decent position, then a little lighter, so you don't keep bringing your average down, down, down. What I do, as soon as it's locked in, and my first position's in profit or break even, then I'm okay to add. But if my first position's not doing well, I'm not going to add to it. So I'm adding to my winner, and that way my first position is good already. I don't have to worry about it. It's just let it do its thing, or let it run on down. Then I'll try to weave in and out accordingly, and that'll be another trade setup, its own entity. So, does that make sense? So real straightforward here. 65 period moving average. Here's another example. The 8 stops flipped. Red diamonds. Thermometers below 50. Just ride it on down, and there's where you get stopped out. There is a good, bad, and the ugly. You know, it doesn't work every time, and I could point out a few. Here's an area. I've toyed with it back and forth, and that's the one I found that has been the most smooth over the last 5 years. And it keeps me out of the chop. I've tried 50s. I've tried all kinds of different ones. Yeah, it's really just a simple moving average, 65 simple. Trade Guider Systems got that proprietary green, red, and white, which really helps. It tells you about the momentum and when it's changing. You know, there's a trade up in here. You know, there's some green diamonds, blue bars. It's all flipped up. If you looked at the thermometer, it'd probably be green, but as you see, it didn't work. You have some accumulation back here. You know, it should have worked. Probably could have caught it earlier using a different type of setup. With this specific setup, though, well, back in here, it's chopped around, but here's another one, nice one that worked. And now we're back into looks like short mode over here. But like I said, I just wanted to give you the good, bad, and the ugly. It's not, you know, it's not the perfect world, but as we do need to, you know, as we're looking at charts, it's always good to see the ones that are set up properly. But I don't want to disillusion you, and it's trading's trading. Yeah. And like David was saying, as long as we can accept that we really don't, there's a lot of uncertainty, and as long as we can manage our risk accordingly, we'll be able to stay in the game for a long time. And as long as we can accept that as traders, well, it's there's be some good longevity in the career there. Now here's without the 8 stops, or the diamonds, and it's just an 8-stop flip. It's the same exact setup without the diamonds. And has anybody heard of a Darvis box? Darvis box. That was inspired with the Darvis box concept. I call it the trade guider Darvis, or the trade guider box, because what happens is they consolidate into a little box with these settings, and then they flip over. You wait for two of them to be one on top of each other, wait for them to flip, and take the trend on down. The idea is you see a pivot in the background at 45 on the high or 45 on the low, or accumulation distribution. Just make sure those are in the background, and it should trend on down. And if you just blindly start taking each one, you'll end up getting chopped around a bit. It's one of those trades you get into and you just sit and wait, and you check on it a couple days later, 2-3 days later. You check on it every week. It's not something you stare at on a daily basis or intraday basis. Here's a way to lock it in a little tighter, and you see that it pretty much did the same thing the volatility stops did. But if you're just working with your 20-period moving average, a lot of people utilize that as a moving stop. And you'll see them gunning for those stops as well. So that's something to be aware of. But that's another subject. I've developed a trade based off of that as well. But here's an idea of locking it in a little quicker with the 20 if you don't have the 8-stop set up. Again, it flipped. Bearish volume. Let's go with the trend. It broke a pivot level here. See this background here? There's a pivot. Well, it broke below that level. So that's good stuff. So let me elaborate a little on that. I talked about pivot high, pivot low. Typically will cause a trend or some type of distribution accumulation. Well, when this was holding it up, it just broke that level. So that's another filter I utilize. Well, if the pivot low just got broke, now it's becoming resistance. So now I can take that trade because I'm comfortable that it's already taken out the resistance level. Really encourage you to go through a lot of stocks in the background and test yourself. It's what I used to do on a regular basis. I still find myself doing it on the weekends, but I try to stop myself. What I would suggest to do is go right in the back. Don't see what's on the right edge of the chart and start ticking through them one at a time. And ask yourself, are you going to get long or are you going to get short? And test yourself as you go through. Really encourage that over the weekends. You just take it back and take all the settings off there. Take it back here. Just scroll back. And click on the right edge and just hit arrow one at a time. If it's in the live market, it'll paint them in and scroll you back over. So you can pin it, put it enable or disable auto snap right there. The excellent way to practice your skills as a trader as well is go back, utilize the lines that I showed you yesterday, and look at the volume spikes and put up enough bars where you can see it. If you do 200, it'd be too many, but go in the background, 90 bars here. Look at these, mark them off. Matter of fact, you got a spike here, a spike here. You start marking these off with those lines. This is a little digression from yesterday, but if you mark those off and then start going to the right edge one at a time, and when they get to those areas, you know what's going on in the background, if it's falling through, or if it's accumulating or distributing, or if it's rising and testing. And then say, okay, there's some weakness back here. It just sliced through. So every time it goes back up to these levels, in here, volume, I'll take the low of this bar, because it correlates with the low of that bar, and it's pretty massive volume here, right there. So next time it comes to 98.13, I'll be paying, if it goes up there, what's going to happen? And I really encourage you to take the bottoms and tops and see how it reacts to the right edge of the chart. I see a widespread down bar. I actually stopped the move. So you have a low here, and then you have your support right here, which correlates with this. So what's going to happen at this level, in this level? So I'd mark off the, let me do it here. I wanted to show you how to do a drill like this as well. I hope you practice. Practice makes perfect. Good practice makes perfect. So what would we expect at 90.02? What would be the expectation there as this coming up? What are we looking for? It's a resistance. So if they want to take it through that, what do you think they might try to do it? Spike it up, run the gap it up, and discourage. The answer was gap it up, discourage the people to sell. Another one would be to drive it up with a pretty decent spread, try to absorb some of the selling, and then they'll most likely come down and test it if that happens. If you start to see upthrust and no demands, what would you expect to happen? It would go back down and start retesting that 75.62. Well, it just came down on low volume. Well, it looks like it might be poised to take off. Right? Came down on low volume. It's testing right before the area of resistance. Do you see that? Low volume down bar. It's right at resistance, and it looks like they're testing.
You can see if there's any questions from the...
Sure. No demands, upthrust. Oh, is there any questions on the internet? You want to elaborate a little? So let's test ourselves here. Okay. Yep. It's a good drill. I really encourage you to go back on the weekends and do this day in and day out. There's a little supply on that bar. There's your effort. It closed above it. Some weakness come in. They're capping it. Right? It's got a lot of volume, pretty narrow spread. Seem to be capping it, so you would expect a test right now at 90.02 for some signs of strength. Well, it came down at a little heavy volume. 2-bar reversal. What's that? Okay. Now low volume test. Good. The answer was low volume test. We've just broken over the resistance level and it's testing. So it looks like it should go higher. Now, tests do fail. So what would be the kicker is it going to go over 94.60 in the next bar or two. If it doesn't, well, it'll probably come right back down and test. Well, there's another one. The indicators combined with the volume thermometer to take a trade, I utilize the volume thermometer only for a crossover and nothing else. Yeah, we got now we have another test, which kind of looks like a shakeout test, right? I have a saying that's fairly easy to remember. It kind of rhymes. No supply followed by shakeout equals breakout. There's my crayon. Hope you can all see that. And you can reverse them too. You know, shakeout plus no supply equals breakout. So now that we have an expectation, well, if that doesn't happen, something's wrong. We have to accept our opinion of the market is wrong because the market told us so. Market's the boss. It's going to tell us what's going on there. So my expectation is, again, 1 to 3 days. If that thing doesn't take off, it's probably not true. But what I found is no supply shakeout. You're typically going to get some type of climactic effort to rise after that within 1 to 3 bars. So you're on an uptrend. You see a no supply shakeout right at support. Expectation is it's going to fire out of there. So let's go ahead and take it, scroll it over. It'll supply in there. That's a healthy bar. It's a healthy bar. That's 1, 2. There it goes. It's rising out. 3, 4. Here, now, what do you think they're doing right here? Doing a little testing, see how many sellers are left. A little supply in there. It popped right back up though. Now what's that? Another test. Now we know tests need to break out to be successful. There it is. There's your breakout. That's the expectation of a test, 1 to 3 bars, and you see that. You know you've done the right thing. Now the market just gave us a gift. So if I'm on the daily chart, I'm blocking it in with the 240 or the 60, however aggressive you want to lock those things in. And that's an excellent way to manage a trade with TradeGuider, utilizing multiple time frames, those H-stop settings. And I'm just showing you something with 3 and 2.5, but it's dynamic. I have a 1.75 setting, 1/4 setting, and then the standard 2 to 1.5. So I really encourage you to go back and use your creative trading minds to mess with those settings a little. But I gave you some really solid stuff to work with right off the get-go. But I really encourage you to make it your own as well with some of these measurements of the trending system. We've rolled right back over. Now what do you think they're doing here? And top 2-bar reversal right here, yeah. And that's the question was, do you call that a 2-bar reversal at the top? And yes, when you see those that pivot, it's just like a gap down shakeout or an up thrust. If you see that as those that pivot highs and pivot lows, that's a shakeout over 2 bars. It's the same thing as that. It just took 2 bars to do, and vice versa. Starts to go up and then right back. That's a 2-bar reversal. And if it's pivot high and pivot low, it's the same exact thing. So there's nothing to the left where it's the ultimate top, and nothing on top or bottom. So if it's a pivot low, and I typically go 90 bars back. You can go a little further, but 90 bars is a good one for myself. So it's the same exact thing. 2-bar reversals are up thrusts that are hidden over 2 bars, basically. That's how I look at them. Now, what do you suppose they're doing here? And why would they be testing here? Oh, I just gave you the answer. Why do you think they would want to try to test here? We went over those lines yesterday. What's going on back here? A little effort to rise out of there. Well, what's the top of that? Is it a coincidence that they're testing up here? No. There was all this massive volume. They had that effort to rise. It went sideways, and then they start grinding up higher. That's the last area of support. Does that make sense? Why they would test immediately right here? Matter of fact, I'm going to draw something that yesterday we spoke about specific things to look for when you have climactic action. It starts to come down. We know that they're probably going to try to take it higher. Well, I've found that when they do push it up, if you look to the left and look at the last pivot high, just immediately, don't go too far back. Last pivot high of where they're running it through, they're going to come right back down and test that over here. And it happens over and over and over again. And that's exactly what's going on right here. Just on a smaller intensity. Does that make sense? You got that wide spread up bar, and you got some things going on in the background here. And it might create a little pivot there. Well, it's pushing through there, and most likely it's going to come right back to those levels and test it if it starts to come down immediately. And excellent spot. It's almost, it's picking that effort to rise up out of the creek. And you'll see that on a regular basis over and over again. And it almost always comes down to those levels. So I wanted to do a little side note on that. Get back. I really want to stress the importance of, here's our accumulation phase. It popped out of there. We'll start looking for the crawler or the trend trade. So as soon as it pops out of this level, we're starting to look for the trend trade to the upside. This is what I mean about locking in profits and trailing using multiple time frames. This really helps you manage a trade once you get in it. When the weekly triggers, lock it in with the daily chart. Then the weekly catches up to it. Just peel it back to the weekly and start looking for more ways to enter the market. When the daily triggers, I use the 240. When the 240 or when the daily catches up to 240, I go back to the daily and cap it in and look for my next trade. That way I'm establishing positions that are risk-free after a while. If I get stopped out and it takes me out, step aside and wait for another one. But the idea is once you start locking them in, it becomes a nice project for about a year. Peeling back to the original time frame will allow you to cap it. That's exactly what I was talking about. Just peeling back and peeling back. Then wait for another one to utilize. If you say you get on a weekly, just wait for the daily to set up. If you're on the daily, just wait for one to set up on the 240, and that way you can weave in and out of it a little better as well. If you do see climactic, when I see climactic action going in my favor, I tighten my stops up. So the market just gave me a gift. Climactic action or areas that are strong support or resistance, I tend to tighten it up a little more and see what's going to happen next. If it starts to show some signs of weakness, then I'll really get aggressive and start shortening my time frames. I won't take it out because this specific setup is not, don't get out, but just keep tightening it up and protect it as much as you can with this specific setup. So we talked about the top-down scans, and I do have a napkin drawing in here, but if you see a principle appear on the indexes, accumulation or distribution followed by a trend, again, the market's trending down, you start looking for the ones that are acting weaker. And there's a dynamic to it. You can catch those ones that have the 90-bar highs with those up thrusts as well, because you're going with the index, and most likely it's going to pull back with it. And vice versa. The index is going up, and all of a sudden you start seeing gap-down shakeouts that just happen to start turning. We're talking about springs and up thrusts. Yeah, so it's all gelling together, all correlates together there. Here's the beautiful napkin drawing. I'm glad we went through the end of day there. Okay. Yeah. That's a good place to draw here.
And I said, while you're doing that, could you also at some point go over the W and M patterns again when you get a chance?
Okay. Good stuff. So the what I've referred to the creek, you get the widespread down bar, you have a shakeout, it starts to kind of meander around. It's the Boy Scout looking for a shallow area to jump across the creek. But what I do is, as soon as I see an established, let's just say this isn't here. Okay, 1, 2, got 2 or lows. Okay, this is my creek at the moment, right there. But this just proved to jump over it. That could I didn't put the volume in, but that could possibly be a test. But we know tests fail. Now we have 2 more down bars, and now that's what I'm looking at for it to jump. And the idea is, now I'm looking for those double bottoms, and then a jump over this area. So the creek in the W is this part of in my trading world. This is my creek right here. The Richard Wyckoff, his creeks are a little crooked, but it's the same idea. They're doing this. What I've done is I say, I want it solid, and this is exactly where I want it to be. I'm going to be very particular about it, and look for that W. And I'm usually trying to figure it out right about that part of the phase before it happens, and that way I can anticipate that gap down shakeout over here, and then I can anticipate a jump above and a test. So I'm always planning ahead of what's about to happen once I start to see things happening on the chart. And yeah, the question was if the W second bottom of the W trades below the first W, it would look like a spring. And what I found, and that is correct. What I found is sometimes they'll look like this. Sometimes they'll be perfect, And then there's other times it'll be a little deeper. But usually, more often than not, you'll always see a shakeout on the second one, or those 2-bar reversals that I was referring to. And then we were just talking about that earlier before the session, to relatively look at the volume from one bottom to the next. And relatively speaking, is it lower? If it is lower, then they've already done their job and shaken everybody out. They have a least path of resistance to the upside. There should be an expectation to jump the creek. So if I get on a gap down shakeout, it's on lighter volume, my expectation is it's going to get up there and jump over there, and I'll be able to add on a test. Now with the M's, it's you just turn it completely upside down, and now I'm always anticipating where this level is going to be before it happens, and then a fall. So now we have, I'm looking for up thrust in here, and then I'm looking for a breakthrough, and then I'm looking for no demands and up thrust after it falls. Now with the my napkin drawings here, which was, I'm glad we went through this. It's what it is I look for the waves or the thrusting. See, here's the Dow. It kind of waves down and then goes up, waves down. What happens here is this isn't going down as fast, and this goes up faster than the Dow. It's a napkin drawing, but you saw it on the trade guider chart, and it's a lot more straightforward, but that's exactly what I'm looking for. Did the wave go up faster? The intensity of the thrust. Pivot setups, enter tops and bottoms. Is going to be redundant here, but 90 bar high up thrust. Up thrust needs to be up an up bar regardless of the volume. It's if it's an up bar and it's an up thrust, that's good stuff. I'm not worried about the volume. If it's low volume, it's up thrust, no demand. It's heavy volume. They just fooled a lot of people. Now, if it's a down bar, I'm very particular about that because it could be a no supply in disguise. And so if it probes down, looks like an up thrust on low volume, I'm going to stand aside. And I'll show you some examples of the 3 specific up thrusts that I look at. What I do is I enter on the close of the bar, and my expectation is it should break down. If it doesn't, I'm going to get out pretty quickly. I'm not going to mess around. If the next bar goes up on no demand, I'll add to my position. If it goes up on regular volume, I'm out. I won't let it hit my hard stop, and I have my hard stop above the up thrust just in case. But that's how I keep my winners or losers cut quickly. I'll do a certain percentage, but my goal is to never let that percentage get hit. So, and that's the objective of. For one, you're not hoping and wishing. And you're letting the market tell you when to get in and out of the market when it comes time to protecting your position. 90 bar low gap down shakeout. I showed you some examples yesterday of how it could jump the creek, come back down and do a gap down shakeout right at the creek as well. Well, here's another setup. It's a 90 bar low gap down shakeout. Enter on the close of the bar. Expectations it should gap up the next day. This will probe the market and catch the move before the trend changes, but what you're doing is you're doing it on the cause. Professional money accumulate. Safest way to do it is wait for them to accumulate and pop the creek, come down and test and take off, but there are ways to follow along with them if you do it safely. Money management, risk management is really important. And lock in those profits using multiple time frames. I can't stress that enough. It's very important to weave in and out. So if you're on the weekly, go to the daily, and as soon as the dailies or the weekly catches up to the daily, you can cap it in and write it off the weekly and start looking for another setup. And remember, it's once you're done with one setup, it's its own entity, and it has nothing to do with that other trade. So you have multiple trades within the trend. Here's the upthrust. Upthrust criteria for myself, it needs to be heavy volume if it's a down bar. The light volume, it's very suspect. It could be no supply, and they're going to pop it right out of there. Again, the upthrust on up moves, light volume or heavy volume, medium volume, it doesn't matter. It's an up bar. It's an upthrust, and it's an up bar. It's an upthrust on a down bar, no supply. And there's your no demand upthrust. That's a beautiful one. It means they actually fooled them and they withdrawn. So today you should, with this session here, you should be able to find the starting of accumulation or distribution based on the W's and M's. Widespread up bars, we talked about that yesterday thoroughly. And what to look for thereafter. You have those springs and shakeouts where they jump the creek, and then you have the up thrust and double tops, and then they fall through the ice. You should be able to find those pivot highs and lows, the gap down shakeouts and the up thrusts, 90 bars. You should understand how to find stocks that will trend faster than the index. This will help you trigger swing trades based on trend and, I want to really stress this, and cause in the background. You got to have those causes in the background. If the turtle traders, you read on them and you see what their demise was. It's trying to be a trend trader in a sideways market and not understanding accumulation and distribution and pivot highs and lows and things of that nature. This will help you add to your winner using multiple time frames as well. You've got the probing of the springs and up thrust. You have the trend that just crossed over, and then you have as soon as it goes up above that accumulation and pulls back and starts testing, and you can take test in a rising market. Take your no demands and up thrust in after it starts trending in a down market. So basically you have three, you're adding to your position with three specific ways to do it, and test and no demands they're going to happen as the trend's going along as well. So there's three setups, but it could be multiple times. And this is how you open. You have an open target, and you let those winners run. Because there was a part of me that, and every trader could probably relate to this. There was a part of me where I'd take my profit and then I'd watch it keep going. Like, it's okay. I got 50% of the move, but how can I develop a system that'll help me catch everything? And this satisfies that. And this is just one specific setup. And I don't get me wrong, I'll take small moves as well, but that's why I've come up with that. And I think a lot of us can relate to that. So really encourage you to thoroughly go through these. Excellent. Excellent. Yeah, the question was about upthrust, and if it's heavy volume coming down, could it be suspect that they're mopping it up a bit? It's an excellent question, and what I do intraday-wise, when I see a 60-minute bar upthrust, I look at a 30-minute chart, because there's two bars within the 30, and I'll see what that upthrust is made out of. And if it's looking like something like this, well, let's put a tail on it just to make it more. If it's looking like something like this, well, that's a little suspect. If it's a 2-bar reversal, that's good stuff. Sometimes it'll just look like this on the half hour. That's good stuff. That's not good. Or if I get something that's pretty low volume here, and all of a sudden that looks like a no supply bar, I'll be a bit suspect, and I'll wait. I'll put my order underneath it and wait for it to prove itself. So if I'll break down the upthrust and see what it's actually made of on a smaller time frame. And I usually do that with the 60 on the weekly and the daily. It is what it is. But excellent question, because I dissect that 60 and make sure I'm not trying to sell it at no supply on a half hour. So multiple time frames are pretty. You have to look at them all for sure. You see the overall picture, because you could, as I brushed on yesterday, you could see this on the 60-minute. In the 5-minute, it'll be doing this. It'll go through multiple phases before this one even starts. So it's really important to see the whole overall picture and then go with what's going on the bigger time frames. So any questions on any of this? And did that satisfy some of the M's and W's, or should I cover that a little more?
I think, yeah, if you could go back and just revisit, Abdul was asking, if you go back at Trade Guider and just show, taking out the volume thermometer, how you align the 8 stops with the diamonds, with the signals themselves, and maybe explain what they are, because I think there's a few people in here who are brand new and have never even seen the software.
Okay.
So, because we've got 10 minutes, so I think that might be useful to cover. By the way, just so you know, everybody, we've now got the Weis wave and the VSA indicators together in TradeStation. We've managed to figure that out. So they're pretty impressive, aren't they, Gary? We sure are. I've never seen it, so it's the first time I've seen them together like that in TradeStation. And yeah, Eileen said if you could also just revisit the W and M patterns.
Okay. Let's find the trender.
We've got it at the moment. Weis wave and VSA together, working Ninja Trader, TradeStation, and that's it. At the moment, Metastock is the other one. That's the 3 platforms they work in. Do you just want to repeat that to the audience? Currently, we can just let everybody know that we've got the VSA indicators and the Weis wave indicators together now to show them this afternoon before we finish in TradeStation.
Okay, TradeStation's all set up for the VSA and Weis wave. We'll be showing you that this afternoon.
They won't automatically. You're still going to have Metastock over here, Trade Guider here. What we will have in 6 to 8 weeks is you'll have the Weis wave and Trade Guider, which is the ultimate solution. And if you want a short-term solution, we've got the VSA indicators for Metastock, and we've also got Weis wave for Metastock. So we can have the two together. What we're going to show you in TradeStation, you could have in Metastock today. If you wanted it in Trade Guider, it's 6 to 8 weeks away.
Okay, the question was utilizing, just walking through a setup real quick here. We have narrow spreads, they're testing. And then we have a no demand, and then what's this right here? What's this bar right here representing? Little trap move. Never came back up to these levels. So that's the cause right here in the background. There's a red bar, a red diamond. There's your stop. It's turned green. Well, let me actually make sure this is 65. Okay. I'm out. It's turned green. I'm out. I'll get out the next bar. Now, red diamond. I'm in again. There's a cause in the background. Trap move. Yep. Yeah, if there's no cause in the background, there's no reason to take a trade because you'll end up trading a sideways market most likely. Trap move in the background. Now this one actually keeps you in and rides you down to here. Now once it's getting down to these levels, I'm off the daily and I'm on the 240 now. I'm locking it in. So I just showed you the good and the bad, which I'm glad because I don't want to disillusion you. But very, very important to keep these filters in the background and manage your risk accordingly. And as you know, gold did an excellent move previous, but you have a trap move back here. Now, well, actually, if you look a little deeper, you got your strength back in here anyhow. But, logical spot to keep your stops real tight is anytime it comes back into these areas of support. Now, if it broke through these areas of support, would you think the trend trade would be back on in full force? If it broke these levels right here. Yeah, would the trend trade be in full force there to the downside? Yeah, what if it so the answer was, yeah, if it significantly broke it, that'd be good stuff. And that's the idea. It shouldn't trade there with a shakeout. Yeah. It should trade down and then it'll start pushing. Yeah, and if you're looking at the GLD ETF, you'll see gap down shakeouts at these levels on a regular basis. And they go right back up to resistance and roll right back over and start testing again. It's been a fun year. Let's put it that way. So I really encourage you to watch these lows as well. But, did that make sense with the trending system? You got to wait for a VSA principle in the background or some type of thrusting up or down. How about the internet? Was that? What question? Okay. How about the W and M? Okay. Widespread up bar. Widespread up bar. No up thrust, no demands. Starts to go sideways. And what do you suppose? Now have a higher high, higher low, higher low. What do you suppose this area would be now? Right here. Widespread up bar, climactic action. Came down and did little test. Another up thrust in here. See how that's starting to form? Now what are we looking for here? Some type of trap move to the downside. Yeah, exactly. A lot of times you'll see it. Sometimes you won't, and that's the beauty of taking those pivot highs and lows as well. So sometimes you catch it early. Currencies do that a lot, actually. They'll thrust up and take off, thrust down and take off. It's good stuff there on the currencies. In the stocks, you'll see a lot of gap down shakeouts, those types of things. It's the nature of stocks. So M's are typically Started off with climactic action. That's number one. You have up thrust and no demands showing up. It doesn't necessarily have to be back to back, but you'll see that as the market starts to round and go sideways. That's what creates those M's. It's a rounding effect of, and you have the trending system on, or the diamonds. It's amazing how smooth that gets, and it just kind of rounds the tops and bottoms. But within that roundness, you have that widespread bar and those double tops and the shakeout, or the up thrust. I'm looking at it upside down. And as soon as you see it break through that support, it comes back up, and you start looking for those solid signs of, it's really redundant. Exactly. The comment was, so when you're waiting for a solid setup and you see the double top and then it catches some support, goes back and up thrust, and then a slice through, now you're waiting for that sweet spot. Any type of up move on no demands or up thrusts, very conservative spot to get in, and trading stocks, you've got thousands of them to look through, so they will be there. It shows up over and over and over again, and that's with the M's. That's typically you'll see a double top if it's on lighter volume. The second top's on a lighter volume as well, relatively speaking. It's the same thing as a gap down shakeout on the second bottom on relatively lower volume. Does that make sense? All you do is just flip it, completely flip it upside down. It's the same exact principle, upside down. That's the beauty of volume spread analysis, and the Wyckoff method is it's so redundant and repetitive. Pretty soon, the light bulb will come on, and yeah, you'll be able to see exactly where it should stop and where it should go, and where to get in. Does that make sense with the M's? Yeah. What were some of the questions you want me to repeat? That. Do I trade the? The question was, do I trade the bar that's slicing through, or do I wait for it to pull back up and then take? I like to wait for it to pull back up, take no demands and up thrusts. Now with the crossover, you'll see the gotcha bar, but that will typically trigger the trend trade. But I won't take it there. I'll take it on the next bar.
All right. Any more questions from the audience?
Any questions left on the internet there? There you go. SP. There you go. It's beautiful, isn't it? Yeah, I do them every day. So.
Okay, I think we're going to wrap up, and then we're back at 1:15 then with everybody.
Excellent. I appreciate everybody joining in. It was good stuff. Good questions.
Excellent. All right, let me come and wrap up then.